Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourselves, Banking and General Knowledge, etc. Today I will discuss interview questions and answers related to the internal promotion examination for banks. Welcome to part 11 of my Path to the Corner Office 2025 to 2026 series, where I simplify examination interviews with practical questions and answers, examples to help you climb the banking career ladder faster. Interview questions and answers from credit policy. Now, some interview questions and answers from basics of credit policy. What is a bank's credit policy? The answer is a credit policy is a set of guidelines approved by the board that governs lending activities, risk appetite, eligibility, pricing, security, and monitoring of advances. Why is credit policy important for banks? The answer is it ensures uniformity in lending, controls credit risk, improves asset quality, and aligns lending with regulatory and business objectives. Who approves credit policy? The answer is the board of directors approves the credit policy annually. How often is the credit policy renewed? The answer is generally reviewed annually or earlier if regulatory or economic conditions change. What are the main objectives of credit policy? The answer is profitability, asset quality, risk management, regulatory compliance, and balanced credit. What is the risk appetite of a bank? The answer is the level of risk a bank is willing to accept while achieving its business objectives. What are priority sector advances? The answer is loans extended to sectors notified by RBI such as agriculture, MSME, education, housing, etc. What is non-priority sector lending? The answer is loans other than priority sector, mainly corporate and large commercial advances. What is exposure norm? Limits prescribed to restrict lending to a single borrower or group. What is single borrower exposure limit? The answer is 15% of capital funds, 20% for infrastructure. What is group borrower exposure limit? The answer is 40% of capital funds, 45% for infrastructure. What is credit concentration risk? Risk arising from excessive exposure to a borrower, sector, or geography. What is sectoral exposure limit? Maximum permissible exposure to a particular industry or sector. What is credit culture? The answer is the bank's approach towards responsible lending, risk assessment, and recovery. What is a credit appraisal proposal? The answer is detailed note covering borrower profile, financials, risk, and justification for sanction. Credit appraisal and assessment 16 to 35. What are the 5 C's of credit? The answer is character, capacity, capital, collateral, and conditions. What is credit appraisal? The answer is evaluation of borrower's creditworthiness before sanctioning a loan. What is financial analysis in credit appraisal? The answer is assessment of balance sheet, P&L, cash flow, and ratios. What is DSCR? The answer is debt service coverage ratio indicates ability to service debt. What is the ideal DSCR for term loan? The answer is generally 1.33 and above. What is current ratio? The answer is current assets divided by current liabilities. What is the ideal current ratio? 1.33 for manufacturing units. What is break-even analysis? The answer is determines sales level at which no profit or loss occurs. What is cash flow statement used for? The answer is to assess actual cash generation and repayment capacity. What is leverage ratio? The answer is measures the extent of debt in capital structure. What is sensitivity analysis? The analysis of impact of adverse changes on project viability. What is techno-economic viability? Assessment of technical feasibility and economic sustainability. What is project cost? The answer is total expenditure required to implement a project. What is margin money? The answer is borrower's contribution towards project cost or working capital. What is working capital gap? Difference between current assets and current liabilities. What is MPBF? The answer is maximum permissible bank finance as per RBI norms. What is turnover method? The answer is working capital calculated as percentage of projected turnover. What is credit rating? Risk assessment tool assigning rating based on borrower profile. Why is internal credit rating important? It determines pricing, exposure, and monitoring frequency. What is loan pricing based on? The answer is risk rating, cost of funds, operating cost, and margin. Now some interview questions and answers from types of advances. What is fund-based credit? The answer is credit involving outflow of funds like loans, cash credit. What is non-fund based credit? Bank guarantees and letters of credit. What is term loan? Loan repayable over a fixed tenure of capital expenditure. What is working capital loan? The answer is loan for day-to-day operational requirements. What is cash credit? The answer is running account facility for working capital. What is overdraft? The answer is temporary credit facility allowing withdrawal beyond balance. What is bill discounting? The answer is financing against trade bills. What is LC? The answer is letter of credit assuring payment to seller. What is bank guarantee? The answer is commitment to pay on behalf of customer in case of default. What is retail lending? The answer is loans to individuals like housing, vehicle, personal loans. What is MSME lending? The answer is credit to micro, small, and medium enterprises. What is agricultural advance? The answer is loans for farming and allied activities. What is education loan? The answer is loan for higher studies as per RBI norms. What is consortium lending? The answer is multiple banks financing a single borrower jointly. What is multiple banking? Borrower avails finance from multiple banks independently. Now some interview questions and answers from security, documentation, and charge. What is primary security? The answer is asset created from loan proceeds. What is collateral security? Additional security to cover credit risk. What is hypothecation? Charge on movable assets without possession. What is pledge? The answer is charge on movable assets with possession. What is mortgage? Charge on immovable property. What are the type of mortgages? The answer is simple, equitable, registered, English. What is equitable mortgage? The answer is deposit of title deeds with intent to create charge. What is pari passu charge? The answer is equal charge shared by multiple lenders. What is first charge? The answer is primary right over secured assets. What is second charge? The answer is subordinate charge after first charge holder. What is documentation? Execution of legal documents for enforceability. Why is proper documentation important? Ensures legal validity and recovery. What is stamping? The answer is payment of stamp duty on loan documents. What is registration of charge? The answer is filing charge with ROC in case of companies. What is renewal of limits? The answer is annual review and continuation of credit facilities. Now some interview questions and answers from monitoring, NPAs and recovery. What is credit monitoring? The answer is continuous supervision of loan accounts post sanction. What is stock statement? The answer is statement showing value of inventory and receivables. What is inspection of borrower unit? The answer is physical verification of operations and assets. What is SMA? The answer is special mention account showing early stress. What are the types of SMA? The answer is SMA 0, SMA 1 and SMA 2. What is NPA? The answer is account overdue for more than 90 days. What are the types of NPAs? The answer is substandard, doubtful, and loss assets. What is substandard asset? The answer is NPA up to 12 months. What is a doubtful asset? The answer is asset remaining substandard beyond 12 months. What is loss asset? The answer is asset considered uncollectible. What is provisioning? Setting aside funds to cover potential losses. What is restructuring? The answer is modification of repayment terms to revive borrower. What is the SARFAESI Act? The answer is law enabling banks to recover dues without court intervention. What is symbolic possession? The answer is notice of possession without physical takeover. What is physical possession? The answer is actual takeover of secured asset. What is OTS? One time settlement for recovery. What is compromise settlement? Settlement at negotiated amount. What is write-off? Removing bad loan from balance sheet. What is recovery policy? The answer is guidelines for recovery of dues. What is willful default? The answer is intentional non-repayment despite ability to pay. Now some interview questions and answers from regulatory and policy aspects. What is the role of RBI in credit policy? The answer is issues guidelines, prudential norms, and supervision. What is CRAR? The answer is capital to risk weighted assets ratio. What is the minimum CRAR as per RBI? The answer is 9%. banks usually maintain higher. What is Basel norms? International banking regulations for risk management. What is KYC? The answer is Know Your Customer norms for identity verification. What is AML? The answer is anti money laundering measures. What is exposure to sensitive sectors? The answer is higher risk sectors like real estate, capital market. What is credit audit? The answer is independent review of credit decisions. What is concurrent audit? The answer is real time audit of operations. What is fraud classification? The answer is categorizing accounts involving fraudulent activity. What is red flag account? The answer is early indicator of possible fraud. What is loan review mechanism? The answer is systematic review of large advances. What is delegation of powers? The answer is authority levels for sanctioning credit. What is board level credit committee? The answer is approves large and sensitive exposures. How does credit policy improve profitability? The answer is by balancing growth with risk control and reducing NPAs. Thank you very much for your patience. Please like and share this video and subscribe to my YouTube channel.